Well, as we head into the month of March, uncertainty might be the theme for this month. It's been a pretty crazy couple of weeks all across the board, economy, markets, and today we're going to talk about that. We're going to apply it to what Bill's doing over cross-country mortgage, the mortgage industry. How is it being impacted by all the uncertainty? We'll discuss all that coming up. Welcome in. This is the Smart Mortgage Show. Ben George with Bill Litton. He is the regional president at Cross Country Mortgage there in Chaddsford, Pennsylvania. Every month, we try to provide you a little market update, talk about what's going on, what's on Bill's radar, and also what's the mortgage industry looking like and what are rates kind of trending towards. So a lot to get into today. Bill, how are you?
I'm doing good, Ben. How are you?
Doing well. Month of March is here, which I'm excited about. It means we're warming up. Things are getting nicer, getting outdoors more, maybe some outdoor concerts. I'm sure you'll probably hit at some point.
Yeah, and I keep noticing that it's staying light longer each day, which I love. Yeah, it's fantastic.
Yeah, we're almost through it. But I know while everything's positive on that front, not everything's as positive everywhere else. I know there's a lot of reaction to just things that are going on in the news and the White House, and the economy is up and down. Markets are very volatile right now. So just kind of curious what you're watching here in March.
Yeah, so what we're seeing is with the new administration and many policy changes, markets like certainty. And a friend of mine actually said to me today, we were having a conversation. He said, capitalists can thrive in any environment, but they need to know what that environment is. And they actually don't fully know what the environment is yet because we're not sure of the direction and all of the policy making of this administration. A lot of tariffs and, government workers being trimmed, and there's a lot going on. So what that does is it creates uncertainty in the market. Stocks, equities don't really like that. And what happens is the market will look for safer, more certain investments and head towards bonds. And mortgages are bonds. A bond is a loan. A mortgage is a loan. So when money pours into the bond market, rates actually come down. And that's what we've seen so far here in the past, 45 days.
Yeah, and thinking about all the layoffs, and it's been happening obviously within the federal government. There's been a lot of turnover there. But I think I've seen some other ones. I think Southwest had a big one, and I know some other companies. Just with the uncertainty, I know companies are just trying to look to trim where they are. I've never really thought about this. I'm so curious if you have any data or what you know. But when we see these bigger layoffs, and especially the government, there's a lot of government employees all across the East Coast, right? Does that impact the real estate inventory at all? Do people tend to sell and get out of their home and move somewhere else, or do they stay put because they got a good rate? Like, does it impact the actual inventory on the market at all?
What I would say is that at some level, unemployment absolutely impacts inventory, because if enough people are unemployed, they won't be able to qualify, or the sentiment to move, the consumer sentiment will be low in the economy, and people won't move. They'll stay put. So far, we have not seen those levels. What we are expecting to see, though, with unemployment is that if enough government jobs are trimmed, what's going to happen is the unemployment rate's going to go up. And as you remember, we've talked about this a lot. The Fed has two mandates. One is to maintain inflation at a 2% rate over the longer term, which just means that it'll never run 2% exactly. It's going to be a little higher, a little lower, but the average will be 2%, and maximize employment. And so what the Fed has said is we're looking for a few more cracks in the employment side in order to be more accommodative to lower interest rates. Well, they are going to start to see those cracks. So we're wondering how the Fed's going to react to that. We do not know for sure. But with the uncertainty and the rising unemployment rate, we do think that would be an mortgage interest rate friendly environment.
And I think to that point, I think I saw a headline as we were sitting down to record that 7 straight days, the mortgage rates have inched lower. and I think they're somewhere kind of close to where they were in December when they were around 6.5. So, I mean, I guess at that point, the trend is positive for people that are looking to buy. Do you think that trend continues, where we'll continue to see that those numbers drop?
So, and here's the tricky thing, Ben. It's always at this moment, yes,
Right.
but we're always analyzing new data, and the trend is always the forecast is always adjusted based on new data being considered. So, at this moment, yes, we do. And here's what I would say: the important thing is we've touched on 6% rates a couple times in the last 2 years, right? So rates were, you know, sub 6% for a long time. We went into the COVID period where they were 3%. And then somewhere in early 2020, late 2021, early 2022, rates started to climb. And then they eventually got towards 7%. And they've stayed in that range primarily over the last 2 to 2.5 years. They've touched down towards, upper fives, lower sixes a couple times, but they haven't stayed there. So the trick is, even if we don't get back to 4%, if we could stay firmly entrenched in 5.99% territory, I think that's going to open up inventory, because a lot of people, and there's a lot of surveys that say people aren't going to move unless they absolutely have to, if it's going to triple their interest rate, or even more than double, but less than double. It's the people who have the wants, right? Right now, it's the people who need to move that are moving. But the people who want the extra bedroom or the pool or the bigger yard or whatever that amenity is that they want, they're going to do that if even if they're going to take a higher rate, if it's not more than doubling what they have now, they'll strongly consider it, which means they'll sell their current home, which means that's going to open up inventory for the rest of the market.
Yeah, just looking at a chart from the last 4 years or so, you just see that that 5 number a couple times just kind of dipped in there, but then jump back up. So yeah, I think if you see that 5 in front, it'll make a lot more people more motivated, I think, to get out and look for those homes. So it's interesting to track, but mortgage rates around 6.5 time of recording, but a lot to watch. And as you mentioned, every day is a new headline. So, depending on what happens externally will impact things as well. So exactly. What are we watching heading into April? Anything on your radar just the next few months, Bill, or you just kind of keeping an eye on the same thing with the Fed?
Well, we're gonna keep a close eye on inflation. Now, inflation's at 2.6% year over year. The goal is 2%. So we're getting really close back to that, mandate of 2%. We do feel like we're seeing some signs that we're going to stay the course here and continue in that direction. Of course, data dependent. We'll keep watching, but we're watching the inflation number. We're also watching the unemployment number. We're also watching other signs in the economy that it might be slowing. So we're going to be watching all of those things. And really, it's how do we apply those in a common sense, practical way to what our buyers are doing, the people who borrow money. How do we position them best for, today, 6 months from now, next year? What's the plan? So we're going to be watching all of that so that we can, construct the best plan for our clients going forward.
Very good. If you have questions, please get in touch, 484-352-4151, or visit us online, smartmortgageshow.com. We'll have another update next month, but plenty more to come in between then. So please subscribe and stay tuned. This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.